Hello guys, and welcome to a new deep value video. Today we're going to dive deep into the financials of Bath& Body Works, ticker symbol BBWI. Let's start with a brief overview. Bath& Body Works is a company operating in the specialty retail industry and is headquartered in Columbus, Ohio. As of the 26th of July, its stock price stands at $33 and it has a market cap of 7.4 billion. Moving on to some key valuation metrics, the company's price to earnings ratio is 8.5, while its price to free cash flow is 10.01. Now, let's take a closer look at the company's growth over the past 5 years. We can see that its revenue has actually decreased by 42.5%, and they haven't recovered from the pandemic. In terms of earnings per share, there has been an improvement from minus 1.33 to 3.45. Furthermore, it's important to note the change in the number of common shares outstanding, which stands at 229 million, reflecting a 15% drop, which is a good sign, but if we take the revenue into account, I'm not so sure. Additionally, the interest rate coverage ratio is 3.82, suggesting the company's ability to meet its interest obligations comfortably. Next, let's move on to the balance sheet, and let's start with the quick ratio, which is calculated by dividing the current assets minus inventory by current liabilities. We see that it stands at 0.9, showing a bad short-term liquidity. A warning sign appears when we try to calculate the long-term debt to equity and debt to equity because of the negative equity not allowing us to calculate them. For my personal experience, any company with negative equity is a danger zone, and you should be very careful trying to invest in these kinds of companies. But furthermore, uh, another worrying sign is the book value, which is also negative. Now, let's transition to the cash flow statement. Cash from operations is 954 million, reflecting a change of minus 23% over the past 5 years. Cash from investing activities is minus 286 million, showing a halving from 2020 levels. Lastly, cash from financing activities is minus 815 million, which has changed by which has grown by 22.3% over the same period. Now let's look at some of the most important metrics in a company, ROI, ROA, and ROIC, because ROE isn't calculable in this case. ROI is 24.5, the ROA is 16.7, and of course, return on invested capital, ROIC, stands at 15.28%, a crucial metric for understanding the effectiveness of the company's capital allocation. Finally, let's end with a discounted cash flow analysis. By using a discount rate of 10%, a revenue growth rate of minus 0.22% based on historical averages over a 10-year period, and a perpetuity growth rate of 3%. We estimate the fair value of the stock to be $15. This suggests that the stock is currently overvalued by 122%. To wrap up my analysis, I'd rate BBWI as a sell. Personally, I would consider investing in it only if its price dropped to sub 10 levels. Thank you for watching. If you found this video helpful, please like and subscribe for more deep value analysis. See you in the next video. Bye.